First, on the reporting issue you described, we were trying to align our reporting directly to our strategy so that we don't report something that isn't aligned with what we were doing. As we moved into, BYOL, bring your own license, our license revenue began to incline, and so therefore it made a lot of sense for us to sort of report in line with the strategy we were bringing to market, and that's what we did. Second, when you talk about the quarter, I'm not 100% sure what you're referring to. There could be some analysts that thought the number was different, but in the quarter, by the time we forecasted versus when we reported, currency moved significantly, and so therefore, if you actually went back to our original forecast and the original currency forecast, we would have beat that number on the cloud and support line. So we felt very good about the quarter, both from a revenue perspective. Our view was we beat the revenue versus the original forecast when adjusted for currency, delivered 19% EPS growth, and had record operating cash flows in the quarter. So to your last point about what are we focused on, we actually think we can do multiple things at one time. So we actually are focused on both our top line as well as our bottom line results simultaneously.
Okay, so talk about the database growth specifically. Larry Ellison, executive chairman, founder of Oracle, broke out database and some of the innovation that you are pushing there, and I imagine you're going to be talking about this at Open World coming up in just a couple of weeks as well. That's a main area of focus for you. It's a big buy for a lot of companies. A lot of companies feel like they've got to have it. Amazon has been talking quite a bit, and we expect to hear them talk quite a bit in just a couple of weeks too about their challenge to you in database. How is that business affected by some of these cloud challengers that you guys have, and how are you going to continue to fight back?
Well, first let me give you some numbers and then tell you about some of the products. First, the numbers, we reported mid-single-digit growth in the database business. The database market, John, probably grows 3% so per year, about a $40 billion market. We've got roughly half the market. And so therefore we gained share again in the quarter. We've done that over multiple quarters. So while there's a lot of talk about this new entrant or that new entrant or this person leaving and so forth, over time I think you just see Oracle continuing to gain share, and that's what we did in the quarter, and that's what we reported. Our database release, our probably most important generational database release is the Autonomous Database. This is where the database is integrated with AI and machine learning that really just self-patches, self-tunes. It's actually a position where you actually get your security issues go down, you get higher uptime, and you pay less money. So we really never in our history had a database release that has had as many positive business outcomes, John, as opposed to just technology. This is a place where you get better performance, more uptime, you eliminate tons of labor. You get now, most of our customers, for example, this I know has become a bigger issue with C-suites now, is the amount of time it actually takes to patch software. And this can be months for most of our customers. This release of Autonomous Database literally eliminates that need to patch. So this is a generational release for us as we bring it to market.
The pace of movement to the cloud, you guys have talked about bring your own license. I think some investors are probably still a bit confused about how that works. But when it comes to the pace of movement to the cloud and the degree to which you are trying to push or not push customers into specific cloud solutions, talk about how that conversation is perhaps shifting or has gotten more sophisticated as different customers have different needs, whether it's hybrid cloud versus public cloud, and the pace of their movement.
Yeah, first let me address your comment about BYOL. That is simply a case where you can buy a license and you can use it on premise or in the cloud. So it's basically a currency that you can move across, and we're one of the very few companies that allow you to do that. So we believe it's an advantage for our customers and what they want, and that's why we utilize that strategy. Second, to your point, I think you need to divide up what's happening in the applications market versus what's happening in the infrastructure or the platform market. In the applications market, you have a chance. There's an opportunity now for most companies now to modernize all of their systems. Let's start with the back office systems. The biggest category of back office applications is called ERP. ERP is basically companies' financial, supply chain, manufacturing systems, etc. All of those are really going to get replaced over the next several years as companies move to cloud, where there's much more innovation, much higher much more work done by somebody else as opposed to by the customer. We're in the very early innings of that market. We have a significant lead technology-wise in ERP. We went through a ton of our customers that a customer wins in the quarter. That market is going to, we think, over the next several years, be very exciting. The technology infrastructure market, you talked a little bit about that earlier, John. That's as you move farther up the stack, meaning from compute and storage to database to other tools and systems, Oracle gets further and further differentiated from competition the further you move up the stack. So just replacing somebody's computer with somebody's infrastructure, while that's interesting, the more you have more technology, more IP, and Oracle has always been differentiated by doing the hardest jobs the best, by investing in R&D, investing in innovation. And so the farther you go up the stack, to Larry's point earlier in the week, that's the further differentiated that Oracle becomes versus our competitors.